Hercules Limited. So Hercules Limited is our next shareholder in Cassie Tapes, and says Hercules Limited is a company with a November year end. Okay, so just bear that in mind. That means the tax year runs from the 1st of December until the 30th of November. The company is incorporated and managed in South Africa. Okay, so it's a resident company. Now remember, when we looked at Cassie Tapes, we had this question about Hercules Limited. Is this a South African company? If yes, there's no dividends tax. So now we know it is a South African company. So there's no dividends tax. Okay, Hercules has consistently had a taxable income that exceeds 1 million rands from the date of its inception. Not turnover, taxable income. Okay. On the 25th of November 2019, the Finance Department of Hercules was finalizing its second provisional tax return for submission via SARS's e-filing platform. The Finance Department is proud that it usually produces a trial balance for the preceding year no later than 31 December of each year. Consequently, the department is still busy finalizing the accounting for the 2019 year. So on the 25th of November, they're doing the second provisional tax payment. Now, remember, if this is the tax year, so it runs from the 1st of December to the 30th of November, December, January, February, March, April, May, 31 May, so 6 months into the year, this is when the first provisional is due. The second provisional is due on the last day. Right, no later than the last day. So if they want to do it on the 25th, that's fine. It's no later than the last day. This one, the minimum amount is the basic amount. Now remember, the basic amount is determined in terms of the fourth schedule. It's the prior year, basically the prior year tax, taxable income, if it was received, the assessment was received in time, and so forth. Okay, please make sure to revise that. The second provisional taxpayer, the minimum, depends on the following. If the taxpayer has, so it's actually a shortened. Taxable income does not exceed 1 million, then you can use the lower of the basic amount, or 90% of the actual taxable income. And if you do less than that, there will be penalties. But if your taxable income, this is if it does not exceed 1 million, if your taxable income exceeds 1 million, then the minimum is 80% of the actual taxable income, not the lower of basic or 90%. Now, it's important for you to note, because this company here tells you it exceeds 1 million rands, the taxable income. So we're going to be sitting with this one. So the minimum amount that they can pay is 80% of the actual taxable income. Right. If you do less than the minimum, then there's a penalty. And the penalty is 20% times the minimum less what you actually paid. So the difference between the minimum and what you actually paid. Okay, so just bear that in mind. So it tells you the finance department is proud that it usually produces a trial balance. Okay, sorry, that we read. So there's some disagreement around the estimated taxable income for the 2019 year of assessment. This is due to uncertainty of whether a large contract with a customer will be finalized. Remember, this is on the 25th of November, so they still have 5 days. Management is convinced that the transaction will be concluded before the end of the 2019 year, but the financial accountant is doubtful. If the potential transaction of the customer is concluded, then the taxable income is estimated to be 12.5 million rands for the 2019 year. However, if the transaction is not concluded, then the taxable income is expected to be 8.1 million rands. The financial accountant has pointed out that if the company overestimates the second provisional tax payment, so here we spoke of the minimum, but what is the maximum? There is no maximum. So what happens if you overestimate it? Right? Then they will not receive a refund for the excess tax until the company has completed its ITR 14 tax return for the 2019 year. So he's saying, if you pay too much for the second provisional tax payment, you don't get a refund. You only get your refund once you've completed your tax return for the year. Your proper full tax return for the year. The accountant is correct in saying that. The final tax return will only be completed once the auditors have reviewed the financial statements, so this will be in the 2020 calendar year. The company has experienced cash flow issues, and an overpayment of the second provisional tax liability will compound this. So this guy is saying, if we pay too much now, we will get our money back, but only in the 2020 calendar year once the auditors reviewed the financial statements and once we've submitted our tax to SARS. But we've got a cash flow problem. So that money, if we overpay now, that money that we overpaid might be a problem for us. The financial accountant indicates that the basic amount, as discussed in paragraph 19.1d of the 4th schedule, is 8.5 million, and that SARS accepted this for the first provisional tax payment. Now that's correct because SARS, the minimum for the first provisional tax payment is the basic amount. So that's why SARS accepted it. The financial accountant has suggested that the company submits this as its estimated taxable income for the second provisional tax payment, as it exceeds the expected taxable income if the contract with the customer is not completed, but it is still lower than the amount suggested by management. The company's first provisional tax payment was calculated as 8.5, so the basic amount, times 50% was for the first 6 months, times the tax rate for the company, 1190. Okay, so can you see here? So taxable income if contract not entered, so that will be 8.1 million. And if the contract is entered, it's 12.5 million. Now, if the minimum that you can pay is 80% of the actual, so if I multiply that by 80%, and I multiply that by 80%, this is 6480, and hold by the 12.5. This is 10 million. Okay, so if they use an amount of 8.5 million, remember the fact that it's the basic amount, that's not really what matters, it's the amount that you submit. That's what we are concerned about. If they use 8.5 million, this will be fine. But this will not be fine. Because, so what I'm saying is, if he submits 8.5 million rands and it ends up that the contract is not entered into, there will be no penalties for them. Because 80% of the actual taxable income is 6480, so they've submitted more than that. So that's fine. SARS doesn't have a problem with that. But if they do enter into the contract and their taxable income is 12.5 million, 80% of that is 10 million. And if they submit 8.5 million, it means it's too little. So then there will be a penalty. Okay, this is a little bit tricky. We continue with this Hercules. It then says, Hercules owns shares in several companies. Some of these shareholdings are considered speculative in nature. If it's speculative in nature, it means it's trading stock. Now, just remember, the moment you see trading stock, shares as trading stock, you have to watch out for Section 9C. Section 9C says, if shares held 3 years or more and disposed, it is capital in nature. So even if it is trading stock, you still treat it like it's capital in nature. Just remember Section 9C, and if you can't remember that section, please revise it. So here's the first shareholding. Alright, sorry. They didn't say others are long-term investments, so that's already capital. You don't consider Section 9C for capital because they're already capital. SARS has accepted Hercules' classification. So shareholding A. Hercules acquired the shares in Cassie Tapes. Remember Cassie Tapes? All the way at the top. Okay. They acquired the shares in Cassie Tapes in 2008 at a cost of $860,000 from one of the original investors, and they held the shares as a long-term investment. Okay, but what's now important for you? Remember, the Cassie Tape shares on 31 October 2019, so in this tax year, there was a liquidation. So that's a disposal. Okay, so I have to check that. Then shareholding B, Apex. Hercules acquired 5,000 shares, a 1% shareholding in Apex Limited, a company listed on the JSE on the 10th of September 2015. On the date of acquisition, the market value of the shares was R45.90. Hercules acquired his shares as part of his trading portfolio. Soon after acquiring the shares, the market value of the shares decreased due to the management scandals exposed by the media. Hercules did not want to sell the shares for a loss and held on to the shares. As the investigation into the scandal progressed, it became apparent that the company was still a viable company and it was expected to recover once the guilty parties had been replaced with competent individuals. As time progressed, the share price has steadily increased. And on the 18th of October 2019, the company sold the shares at its market value. So I wanted to see here, they purchased on 10 September 2015 and is sold in October 2019. So these shares were held for more than 3 years. So Section 9C will apply to that. Then shareholding C, Pinnacle Pty Limited. Hercules purchased 17% of the shares in Pinnacle Pty Limited on the 16th of May 2017 for 500,000 rands. Pinnacle was a newly formed company competing directly with Uber. Hercules believed that it would make a great investment and it expected high dividend yields. On the 18th of October 2018, Pinnacle declared a total distribution of 117,647 to its shareholders, of which 17,647 was designated as being contributed tax capital. Hercules sold its shareholding in Pinnacle for $650,000 as it was unhappy with the dividends received thus far. Okay, so 117,647. 17,647 of that is contributed tax capital. So that means the rest must be a dividend. Remember, that's how it always works. A company can only give you return of capital or dividend. This company owns 17% of all of that. So 17,647. Okay, just checking my math there. 20,000. Okay, so this company received 20,000 in total. 3,000 is contributed tax capital and 17,000 is a dividend.